Silver fell sharply as leverage unwound across China and the US, yet London moved into backwardation and remained best bid for physical metal. The divergence suggests a wholesale deleveraging of futures alongside continued physical demand. Markets are fragmenting regionally, policy intervention is rising, and price signals are temporarily conflicting as the system retreats. Three stories of the multitude that are out there we're going to touch on. One is a piece of analysis, and the other is a news item itself. Shanghai exports the silver price. Shanghai just proved it can export silver pricing power to the West, and this episode explains why that changes how silver trades from here. That's the first piece from the joint venture between Eric Young, affectionately known as King Kong, and myself, or Goldfix, in the form of my VBL avatar. That was just sent out today. That's unlocked and everyone can access that. It gives an explanation of where things are going, where things have been, and why things are done there the way they are. Eric and I combine our brain power, such as it is, and came up with that for you. Second is a news item. Wyoming brings gold home. Wyoming just chose an in-state private vault to hold its gold. A quiet but consequential shift in how U.S. sovereign metal is being stored, and a clear victory for constitutional money. States are removing taxes. States are encouraging it to be money, and now states are housing their own metal. Josh Fair is the CEO of Wyoming Reserve, and that's the firm that was contracted to house the gold, as opposed to JP Morgan or one of the bigger firms. Paper sells and physical bids. Silver this is current events. This is right now. We're watching it on our screens right now. Silver is selling off hard, but London is bidding. Physical as futures unwind, signaling what we believe is a global deleveraging event rather than a simple breakdown in demand. Now, we're not going to paint a picture and say it's going back up tomorrow. That would just, I think, be irresponsible. However, it would be responsible to say that this is an unwinding of a neo-Keynesian concept. And, well, there you have it. I want you to note where silver's trading right now, $75, $76 in spot. If you go back into CFTC reports, we covered those a while ago. $75, $76 is where JP Morgan flipped long. So if you're looking at price floors, that might be the level that it doesn't get below. And you might have a whippy range right now. I'll give you an idea of how much froth we had above $75. But $75 could be the floor that the U.S. is buying metal at. I'm just throwing it out there. It's complete speculation, but that is how floors work. You bid it, it gets above the floor gets announced, you snap back to the floor. I don't know. But when you're working in the darkness and you only have a candle, you hold that candle and you protect the shit out of it until you see something better.
Silver didn't just fall, it sent a message. While paper prices collapsed across the US and China, something far more important happened beneath the surface. Shanghai proved it can export silver pricing power to the West. At the same time, London quietly became the strongest bid for physical metal. This isn't a normal sell-off. It's a global deleveraging event, a fracture in price discovery, and a warning that silver no longer trades the way it used to. Let's break down what just changed and why it matters from here.
All right, let's do the markets and then get to the stories. I'm going to leave that up there. That's the Shanghai spread to New York. By the way, we'll get into that in a second. 10-year yields are down 2. The dollar is up 11. The S&P 500 is down 57. I need to get a attractive, intelligent woman with a lot of black turtlenecks to start doing this for me. NASDAQ is down 266. The VIX is down up 2. Gold is down $129, the strongest metal of the evening. Silver is down $11.40, trading $76.79. I'm going to laugh because I want to cry, you know. COMEX silver is down down $9.45. Gold is down $97. The spread between Shanghai and spot, Shanghai and US, is now give or take 20. So that spread is expanding. But the spread between Shanghai and London is narrowing. So put it in English, the whole complex is lower, but London is more stable. So futures are dropping in the US, futures are dropping in Shanghai, and spot is where it's going. And so, because futures are dropping more in the US, you're probably going to see metal start to get exported out of COMEX into London. They could be restocking London at $75 an ounce. That could be what's going on. I'm making it up as I go along, but it's better than what else is out there, I think. All right, so that's the metals. Copper is down only 2.75%, down 16 cents. WTI is down 75 cents. Natural gas is up 6 cents. Palladium is down 56. Platinum down a mere $182, 8%. Gold, silver up 11%, trading 62 now. And soybeans, 1090, up 75 basis points. Soybeans are the strong grain. Okay, I want to reiterate this as it gels. When a government announces intervention in a market, price floors, grain people know this better than I do. You get a spike in the price as shorts cover, and the spike is almost always above where the price floor is. The price floor isn't announced, but a price floor is announced, and then the market hovers around as people cover, and then it goes back to the price floor, and then it bounces off the price floor, and people buy it. Am I saying we're not going to go lower? No, that's idiotic to say that. I am saying that this is where, factually, JP Morgan flipped and got long on the Commitment of Traders CFTC report. We discussed this. Others have noted this. JP Morgan got long silver in this area. This is about the price we were trading also when JP Morgan started importing the shit out of concentrate from Latin America. And this is why China squeezed themselves higher. If the playbook is coming out, this is the playbook. I mean, I'm convincing myself I'm right, but I don't know. Let's get to the actual stories. Where are we? We're here. Right. There's the home page. Please subscribe. We'll be locking this down for a couple days. Let's adjust this. Hopefully you're not here for the production value, although it would be easier on your eyes. All right. Wyoming has selected the Wyoming Reserve, a Casper-based private vault, to custody the state's physical precious metals. The decision follows due diligence by the state treasurer and reflects Wyoming's sound money posture, preferences for in-state custody, and broader push to build domestic financial and vaulting infrastructure outside federal or out-of-state systems. Kudos to Scottsdale's Josh Fair for that. The King Kong and VBL show, as promised, a day late, episode 1. Wyoming, that's not the right one. Let's read what that actually should be. The Shanghai-New York silver spread has normalized, ending a market structure stress while confirming deeper shifts. Chinese pricing influence was transmitted globally, then absorbed. The episode shows silver price discovery is now contested across regions, with China exporting signals into Western markets and gold-driven capital flows reshaping silver's role. Together, these two metals are joined at the hip. That is not about Wyoming.
First, let's talk about Shanghai exporting the silver price. For decades, silver price discovery was dominated by Western paper markets, COMEX futures, leverage, and financial engineering. That framework is now breaking. Shanghai demonstrated it can transmit pricing signals globally, forcing Western markets to react rather than lead. What we're seeing now is contested price discovery. Silver is no longer priced in one place. It's being negotiated across regions. And that brings us to the second major development: paper selling versus physical bidding. Silver prices sold off aggressively as leveraged futures positions unwound in both the US and China. But at the same time, London moved into backwardation and remained the strongest bid for physical metal. That divergence matters. It tells us this isn't a collapse in demand, it's a forced liquidation of leverage. Paper is being dumped, while physical metal is being quietly accumulated. In plain English, futures are breaking, but the real market is holding. Now look at where silver is trading, roughly $75 to $76 spot. That level isn't random. CFTC data shows this is where JP Morgan flipped long. It's also where the US previously stepped in as a buyer. That doesn't guarantee a bottom, but it does suggest a potential price floor forming in the $71 to $75 range. This is how floors work. Prices spike above fair value, leverage builds, then gets crushed back down to where real buyers actually exist. We may not bounce tomorrow, and pretending otherwise would be irresponsible, but structurally, this looks like unwinding excess, not the end of the bull case. At the same time, policy intervention is rising. Wyoming just brought its gold home, choosing an in-state private vault instead of a global bank custodian. States are removing taxes, encouraging gold and silver to function as money, and now housing their own metal. That's not symbolic. That's a quiet but profound shift toward monetary sovereignty. Put it all together, and the picture becomes clear. Shanghai is exporting price signals. Western futures markets are deleveraging. Physical metal is migrating toward real demand centers. And governments are repositioning around hard assets. This isn't chaos. It's a system resetting.
For the founders, we sent this out. Silver fell sharply as leverage unwound across China and the US, yet London moved into backwardation and remained best bid for physical metal. That's the price that matters. London's price matters. Again, I want London to die. I want the LBMA to go up. You know where I sit. I sit next to Tom Luongo on this, but it looks to me like they're refilling London right now. Look for metal to go there. The divergence suggests a wholesale deleveraging of futures alongside continued physical demand. Markets are fragmenting regionally, policy intervention is rising, and price signals are temporarily conflicting as the system retreats, resets, ends. Other news and analysis, U.S.-backed consortium agrees to buy stake in Glencore's Congo copper and cobalt mines. And we sent this out to everyone. UBS puts last week in perspective, and it really was a nice, it's not over. This is what you have to look for. It's not over. This for both metals. They're probably going to have to put another one out next week. In case you missed it, Rabo says gold hits 5K as Warsh Fed chatter builds. A lot of this is going to be put on Warsh. I don't think that's the case. I think Warsh could be a catalyst for global disinflation. It could be a catalyst for a market that's worried that even though Warsh is going to lower rates, they're doing it because they're going to stop QE. I don't know, but the whole thing is just being digested right now. Today, 8:30 a.m. initial jobless claims and 10:50 a.m. Atlanta Fed President Raphael Bostic speaks. One of the insider traders, I think. I'm not sure. I could be wrong. Let's take a look at the charts. First, as a reminder, although oil is down today, oil has the least to fall in a disinflationary environment. Metals have the most to fall, and you're seeing that. Metals are going back to the trend, but we like oil, and we're not changing the name to Oil Fix. I saw people say that yesterday. Funny. All right. So gold's weekly. We're still above the weekly trend. You follow? We're still above the weekly trend. So this here was massive short covering, blow off top. Could be the beginning of a short-term or intermediate-term bear market. But look at that. That's insane, right? What's insane is the CFTC says nothing. The CFTC does nothing. Government's not speaking about it. It's just markets sorting things out. It's global warfare. Silver, a lot less pretty. Okay, so silver's also on the trend now. Let me stretch this out a little bit. Hide that, right? So you got your trend here, right? Silver, so you could say on a weekly basis, silver's below the trend. But I see this area here. You see this area here? I'm telling you, I could be wrong, but I'm going to brag about it even if I'm wrong. This is where JPM covered, and this is where JPM's buying more because that's where the government's bid is. I could be completely off on this, but 30 years of trading and seeing how short squeezes evolve and seeing how they resolve and seeing how price floors get put on, the grain people might know more about this than me. This is, my goodness, metals are more interesting than oil has ever been, ever. All right, folks, you're in the most interesting market of all time. Dynamic, volatile, pricing, profitable. If you have physical metal, just sit back and enjoy the show. If you're worried about day-to-day prices, sit back and enjoy the show, because unless your capital is at risk here, because the tape wants you to trade. Volatility is the cancer on profits right now. You want to ignore the volatility or embrace it and trade it like I do. And right now, I'm not trading the volatility. So I've become more of a stacker than anything else right now. God bless you all. All right. Let's go to the daily, get a better look at that. Now you're looking at a new structure. This is a bear structure here. Again, I tell you that the floor is $71 to $75. That's very important to me. Gold, there is no floor under gold. There's just a floor of people buying it forever. Here, let's see if I can draw a couple silly lines here so you guys can all laugh at me, my technical expertise. We're above trend on the daily, right? Silver, depending on how you draw it, your trend could be there, your trend could be there. This is why I hate technicians that zoom out all the time. Well, if you pull back a little bit, it's over here. No, we're below trend. We're below trend. So this market should bounce back. Or we're below trend and the market needs to stabilize in here. Now's the time to do some, tell you, volatility's got to be so crazy right now. Now's the time to do some condors or butterflies. Speaking about myself, this is going to prove to be important, I bet. If it gets below 70, mortgage the house, lease the children, buy some silver. I'm just kidding. If you do that, you're a complete moron. You shouldn't be a parent.
Silver is no longer just a trade. It's a battleground between paper leverage and physical reality. If you own physical metal, the smartest move right now may be the hardest one. Ignore the noise and watch the structure. Volatility is the tax on impatience, and right now it's brutal. This is one of the most dynamic and important metal markets of our lifetime. Stay sharp, stay grounded, and don't confuse paper panic with physical truth.